Things are getting serious. No joking around today, guys. Let's jump right into the charts. Would you buy this chart? Think again. You may already be holding this asset. This is AMC. Now, why it looks like this is because this is actually the inverse chart of AMC. Normally, it would be upside down from what we're looking at currently. But I wanted to give you a different perspective here. It's very clear that this is a strong downtrend. A lot of red candles here. It's curving downwards. So there's multiple indicators that this looks bearish. Now, let me show you what it looks like the other way around. Not so bad, is it? That's much better. Now, I haven't moved these lines at all. Some of our early viewers may remember these lines from way back. Honestly, I can't even remember when I drew these lines. But the next time somebody tells you technical analysis doesn't work, show them this. That was our nice 100% move that we were expecting over 2 weeks ago. Here's the MACD that we were waiting for, curve upwards, this arrow here. It's continued to play out. Now, not only did we talk over and over again about the buy box area down around $5, I also showed you guys this chart, this trading idea. I posted this only a few days ago before the breakout. Our entry was below $7, and we're not too high above that today. It's not the worst entry right now. Remember, it is extremely difficult to enter these positions after they've gone on a big run up. This $11 point target is coming directly from our old conservative gap target. For day traders, we did hit that target. Okay. Technically, not quite. There's a small move that we didn't quite reach. However, our next target is indeed beyond that at $15 to $16, right? Target 2, $15. That's the next target beyond the gap. Note this bounce potentially off this moving average. We're finding some support in this area. We also have our support line at $7.75. That's coming back from this area of consolidation during the breakout. Could even put that all the way over and it's much clearer. Also, if I go into even closer time frames, just delete that for a second. Note this other moving average down below that we're also finding support at. We have a nice big wick here. And what I mean when I say wick, guys, we're just taking our time today. This is the deep dive recap. So just chilling, being patient, remaining calm. We're not going to exit our long position too soon. Recall that we entered a position at $5.40. A lot of people panic sold yesterday from the break of this trend line. I could even draw it less steep, like so. We have a lot of touches along this trend line. So either one's valid once it broke down from that point. Nice scalp opportunity once again. We're seeing a lot of short scalps like this. That was actually a big short opportunity, a whole 20% red move right there. Intraday even. So if, let's say that somebody were to have entered at 775 the day before, ride it up 40%, ride it down 20%, and then potentially ride it back up another 25%. That's some substantial profits. It's not to be underestimated, but day trading is extremely risky right here, right now, if you don't have the proper experience. A lot of people will see this break downwards as a mid-term bearish signal, and they're expecting it to go even lower than where we currently are sitting. So there would be, I would like to just point out the bearish case. Guys, there's people on both sides of the trade. Just because the price is going up doesn't mean everybody's winning. So for the bears out there, a break below the $7.75 support could see an extension as far down as $6.70. I'll put a price tag on this. Keep an eye on where this wick reached. Break below this. But like I said, we are finding a lot of support here. People are more interested in buying after seeing the price dip 30% in a day. So if we go on our shorter time frames, the candles actually look nicer and nicer the closer in we go. So this is the 1 hour. You can see the moving average there. 30-minute, bounce off this moving average. 15-minute, and we have a green candle beginning to form. The last candle was a green one. Not only that, the candle had a higher low. It's very slight, but it is there, technically speaking. Now, on the MACD, we're seeing some more bullish momentum now. I like the sign of this. I like the look of that. We're beyond just this one small bar. Now we have an actual decently sized green bar there. We do see a crossover on the moving averages for the MACD. Be careful if you're trying to hold for long term. There's a lot of false signals right now that may make you believe one thing when really the opposite is occurring. So for example, go ahead and move this arrow down. So for example, on the daily chart here, it's kind of hard to see, so I'm zooming way in, but this blue moving average here, that is a sharp decline. Okay, not only is it curving over, but it's a sharp move downwards. At first glance, that looks very bearish. A lot of people make trades only based on the moving averages. So when they see something like that on the hourly moving average slanting down at such a steep decline, they may be tempted to panic sell. But for the bulls, this actually looks pretty bullish because of our $7.70 support level. So I am actually disregarding this moving average at the moment. A lot of people did buy in at the top here, the local top above $10. It's unfortunate that they weren't able to get in down here. But you guys know I like to keep things interesting. So I decided to see what exactly it might be like for the people entering now. You know, I've been holding my positions for a few weeks now. However, I did make a deposit. I plan to allocate patron funds into a live trading account for the channel, and we're going to keep tabs on that. So I've gone ahead and placed a few long positions. Here's my deposits. Fully transparent with you guys. Remember, this channel is always free, never monetized. So if you're enjoying this video, all you have to do is hit that thumbs up. So I deposited 100 USD. That's coming directly from the Patreon funds. Remember, we gotta pay our taxes, guys. Keep Uncle Sam happy. And I decided to match that with an extra 900. Because let's be real, 100 is not going to get us as far as we hope to go. So I thought a nice round number would be better. And we're going to start this trading account with a full $1,000. Now, I've entered my positions. Tune back in Monday for an update, and I will reveal the 3 secret positions that I'm currently holding long. Personally, I entered my own positions at lower prices than this, probably over a month ago, maybe even 2 months back. But like I said, I want to see what kind of experience we'll have for somebody who were to just enter the markets today. With that being said, you already know that this AMC. So I picked up 250 shares of 3 assets, okay? With the leftover scratch, for my AMC fans out there, I went ahead and picked up 9 extra shares of AMC. Just for you. And I got in just over $10. It wasn't the best entry. Denwo had a late night trading. So I entered my positions, took a nap, checked them, and AMC was down about 10%, guys. Just like a lot of people who entered the other day. So this is going to be an interesting experience. Experiment even to follow along with this portfolio and see if we can recover that over the next couple of days. Cool. Moving on to GME now. This chart is very interesting. Speaking of wicks, notice this gigantic wick on the weekly candle. It makes a lot of sense because we reached the 0.5 fib level, and basically the 0.5 is a reasonable target on this fib here because I have the normal level at these candle closes. It's such a big move. We're gonna ignore the wick up here. So saying that this is our normal level, so to speak, our one level, a 0.5 means the Fibonacci is a measurement tool. Okay, so the 0.5 essentially is saying that it's 50% down from the one level. Opposite from the 0 point down here, the very beginning of our breakout, going upwards to the 0.5 is going to be a 50%, right? So the measured move is much greater than that. It's showing almost 500% or more. And that's why we actually use the Fibonacci instead of the measured move. I'll explain that more in detail in future videos. It's not extremely crucial to understand all the fine details of the Fibonacci if you're just beginning. It takes some time to get the hang of that. Let's get rid of this arrow now, because I'm noticing some other patterns here. I'll leave the breakout of that trend line because it did play out to a very nice move. So I'm going to go into a daily and take a look at our long-term price action, because we've been trying to form these long-term support trend lines as much as possible. And I would like to put another one onto the chart, just in case things were to turn red. This will act as a nice area in the future. Alright, so here's where the price is currently. If things were to turn red, this will act as a nice area of support. Okay. Note all the confluence down in this. I put a box on it down in this box. This is our new buy box. It's very small, but if the price does reach that low, I would anticipate a bounce out of there. What's interesting about this long-term trend line I just drew, and the 0.5 Fibonacci target being hit, it's very hard to see this. A lot of traders are gonna miss this pattern I'm about to draw, but I want to show you guys nice and early so you can stay one step ahead of the markets. Alright, the tricky part is picking a starting point up in this breakout area. There's so many extreme wicks and bounces here that it's it's very hard to even dictate which candles are of importance and which are not. So you can essentially use this whole area as a rough estimate. So maybe I'll just start right about in the middle. And then I'm going to drag it down to where our target got hit. And now readjusting it to make things a little more geometric. If I continue to extend this all the way down to this long-term support line, well, it's a bit skewed, right? It's not symmetric. This is not symmetric like so. It's not a perfect symmetric wedge like we saw play out on AMC over the past couple weeks. But it is a wedge nonetheless, right? That matches up pretty nicely to the pattern here. I would prefer to see this lower trend line at a less steep incline than the upper trend line, actually. This may even be more bullish than a symmetric triangle, being the case that if the price is riding up the triangle and then it does happen to break through, it could be an extreme move downwards. Whereas with this nice long-term support, we're just slowly climbing higher and higher and higher. Okay? Remember to be patient. Lastly, note this massive volume bar coming in. So we have seen the buying pressure pick up over the past couple of days. I expect that to continue in the near future. And that'll do it for the technical analysis today. And congratulations, Zero. You're our VIP winner. Welcome aboard. We're happy to have you as a member of our exclusive trading community. And shout out to all our new VIP members. Welcome aboard. We're happy to have you as well. And a couple of you actually haven't joined the Discord server yet. Please make sure to do that. If you need some more help with how to connect to the Discord server, go ahead and send me an email through Patreon. And here's our winning tweet. This is when AMC took a red dip, 25%. We got Zero here saying, I have time, not sweating, still up. Right on, man. This is one of our loyal subscribers who's been watching from the very beginning. He's a good guy. He's a hardworking pilot. And that's exactly the kind of people I want in my community. Thanks, guys. Happy trading. Have a great day.